Hello, and you're welcome to Global Business Insight, where we look at headlines from a deeper business perspective. In the US, the services sector sustained robust economic output amid contraction in manufacturing as optimism wanes and prices still rose at a faster rate. We look closer at the Purchasing Managers Index data that came in for the US, comparing that to what we saw from Europe and UK earlier in the day, all coming in less than expected. The US economy is a major issue for voters as early voting has already begun. Vice President Kamala Harris is expected to unveil a new economic agenda on wealth creation this week. Also in the US, Biden is proposing a rule to block the sale and import of Chinese and Russian-made hardware and software for connected vehicles. The move is said to strengthen US security against a hacking threat described as very real by the Department of Commerce. UK Chancellor Reeves is trying to strike an optimistic tone as she told the Labour Party conference today that her budget would herald an end to the low investment that feeds decline, adding that fiscal discipline does not mean blocking vital capital spending and that she was not returning Britain to austerity. The Eurozone's biggest bank, BNP Paribas, is buying the private arm of HSBC in Germany, saying the deal would increase its exposure to entrepreneurs in the country. It did not disclose further financial details on the purchase. Oil prices rallied 4% last week as slowing demand concerns were outweighed by hopes that lower borrowing costs would support global economic growth. Brent attempted a recovery after an initial drop as positive PMI data was released from the US. Brent's just under $74 a barrel. It was slightly over 74 a few minutes ago. We continue to get a few central bank decisions this week. Central Bank of Nigeria may pause or deliver a more measured rate hike when it meets today and tomorrow. We will bring the decision to you tomorrow in a special episode. The Swiss National Bank on Thursday is expected to cut rates by 25 basis points, but also there is a 41% chance of a higher 50 basis points reduction. Sweden's central bank meets also expected to ease by 25 basis points. Sweden Central Bank meets on Wednesday, also expected to ease by 25 basis points. The Reserve Bank of Australia, however, almost sure to hold when they meet this week, to hold at 4.35%. Federal Reserve Bank of Atlanta President Raphael Bostic delivered a speech about the U.S. economic outlook, confirming his support for a 50 basis point rate cut, but saying little on future moves. Federal Reserve Bank of Chicago President Austin Goolsbee, in a fireside chat about the economic outlook and monetary policy, also said many more rate cuts are likely needed over the next year and rates need to come down significantly. The preliminary U.S. S&P Global PMIs for September have been released, with services at 55.4, above 55.2 expected, but softer than August's 55.7. U.S. manufacturing sank lower into contraction at 47.0, also lower than last month's 47.9. U.S. September composite data also dropped slightly to 54.4 against 54.6 previously. Although total activity dropped slightly, expansion of the service sector contrasted with a second successive month of modestly falling output in the manufacturing sector. If you compare the data with UK and Europe, the difference is evident in that Europe is lagging with both manufacturing and services deeper into contraction, while the UK and US PMIs are outperforming Europe. Earlier, we got UK Composite PMI at 52.9, down from 53.8 in August, with both manufacturing and the services sector declining more than expected. We will replay our earlier chat on UK and Germany PMI release. That was earlier today. The stronger US activity implies a weaker euro. We saw that today when compared to the US dollar. As German Chancellor Olaf Scholz, Social Democrats, SPD, managed to fend off the far-right AfD in a key state election, despite trailing behind the party according to exit polls, both the manufacturing and services sectors in Europe's largest economy saw a downturn that worsened. That's from the latest PMI data. The HCOB Hamburg Commercial Bank manufacturing PMI for September dropped in Germany to a year low at 40.3 this month, as against 42.4, also missing estimates of 42.4. Services PMI also sank to a 6-month low to 50.6 in September, below the market forecast. The composite output index came in at 47.2. That was the weakest we've seen in 7 months. According to Dr. Cyrus Dollar-Rubia, chief economist at Hamburg Commercial Bank, he said the data intensifies the ongoing debate on the risk of deindustrialization and what the government should do about it. Also, that the rapid downturn in sentiment is most likely linked to the wave of negative headlines surrounding Volkswagen, which has cast a shadow over the broader industry, with the slump in manufacturing beginning to spill over to services in Europe's economic powerhouse. GDP for Q2 in Germany shrank 0.1%. In Q3, another drop of 0.2% is expected, implying a shallow recession, with hope that the fourth quarter will be better as higher wages combined with lower inflation should hopefully boost not only real income but also consumption, and that will also support domestic demand. In the Eurozone, after an Olympics-related boost to business activity in August, output in the French private sector returned to contraction in September, joining Germany, where the pace of decline in activity was the most pronounced since February. The rest of the euro area saw output rise again at the end of the third quarter. That's according to data that just came out today, although the pace of expansion was only modest and the softest since January. The September Eurozone Composite PMI, not surprisingly, registered an 8-month low, contracting to 48.9. Finance Chancellor Rachel Reeves in the UK is expected to tell this week's Labour conference that unless public finances are stabilized, the UK could face ruin. She has been insisting that tough decisions on spending are necessary to bring about economic growth, interpreted as preparing taxpayers for tax rises in next month's budget. She's still calling the budget one that will fix the foundations, not calling it austerity, but one that also delivers promised change and will rebuild Britain. For her, the first test could be how she sells, or if she's ditching reported plans to scrap winter fuel payments for 10 million pensioners, leaving tens of thousands of elderly Britons worse off. Delegates at the Liverpool conference may also oppose a raft of painful measures justified by claims that the new government was left with a £22 billion black hole in the public finances. This comes as we get the latest UK PMI coming in today. This morning, the economy still in expansion territory, but slowing. Commenting on the data, chief business economist at S&P Global Market Intelligence, Chris Williamson, said the data showed robust economic growth accompanied by a cooling of inflationary pressures, hinting at soft landing for the UK economy. The data also was consistent with the economy growing at a rate approaching 0.3% in the third quarter, also in line with the Bank of England's forecast. European stocks were higher as investors assessed potential banking deals amid the disappointing German and French business activity data. US stocks also slightly higher, still seeing momentum after last week's rate cut propelled the Dow Jones Industrial Average to a record closing level. We will look at the Nigeria Central Bank decision tomorrow, like I said, and we'll be taking a 2-week break, resuming at the beginning of the final quarter of the year. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thanks for watching. Bye-bye.